think what we've learned from 2016 is that investing in different markets has been driven by different characteristics. One overriding theme, though, has been a sort of trend towards reflation and investors expecting inflationary trends to come through and growth to pick up in certain areas. And that's led to slight underperformance in some more defensive sectors like telecoms. But actually areas like financials, where we've been heavily exposed, have actually done much better. But in each little region, Japan against America against Europe, really local politics have driven a lot of what's been going on. We've seen that in the Brexit vote earlier in the summer, and then obviously again in the US elections have been key drivers for stock selection and performance. I think looking forward into next year, we see some continuing of some current trends. So again, questioning US policy, how that's going to be delivered, and where we see investment spending plans come through and how quickly those are delivered. Also within Europe, we have negotiations with the UK in terms of Brexit. Again, key decisions to be made next year and to judge the effects those will have on economies and corporate profitability. But overriding that as well, we've had a very strong dollar in 2016. How does that play out into next year's trends for international companies investing? And also, I think the oil price will be very important. Again, it's been recovering gently this year. Will supply contract? Will we see a rising oil price, which again does tend to dent global growth? So I think there's a lot of factors at play next year, and trying to judge how they all interact will be the key to performance. So I think overall the outlook is not gloomy. The analysts are still forecasting growing earnings, and if we see earnings grow, then we should see dividends improve across the globe. Our current Henderson Global Dividend Study is forecasting around about 1% growth in dividends globally next year in US dollars. And actually, if that profitability improves, we hope we can see an upgrade to those forecasts coming through. I think generally we see actually profitability improving from money supply growing, from bank lending improving in various areas. Valuations, though, are modestly stretched in some areas, particularly the US market, but we see better value in Europe and Asia and some of the emerging markets. So wrapping that all up, we think 2017 could be a good year for investing if the infrastructure and the spending plans from various markets, economies come through, and if we can see this corporate profitability improving, then we think markets are on a reasonable price to see actually shares improve over the year.